Well, we've been struck that the market never priced in 0.5, 1, or 1.5% interest rates. We think the market never believed interest rates would stay down here. And so it over time, we believe, has used sort of a normalized 3 to 5%. So we don't think that is why the market is correcting here. We do think the speed of the increase in interest rates is scaring people. It became very comfortable in a low interest rate environment to become involved with the market. And I think this has shaken a lot of investors up, perhaps. And I would say either in the bond market in particular, we've been in a 40-year bull market in bonds. So I think there's a lot of confusion, and I think there's a little bit of paralysis here. I also think that there is a very rapid rotation now into value stocks. We've seen energy up year to date, 39%, financials up about 16%. Those are traditional value sectors. And so I think that's been part of the reason for ARC's setback. But if I could add a little perspective to this, this happened to us in the fourth quarter of 2016 as well. Right after President Trump was elected, the stock market took off because tax rates were going to go down and so forth. And so the market started pricing in a very strong cycle, which was correct. In that period of time, our strategies went negative. And what I said at the time and what I believe now is that the bull market was broadening out to incorporate value or more cyclical sectors. And I thought that was going to be very good news for our strategy longer run. The worst thing that could have happened to us was another tech and telecom type bubble where the market narrowed so that only a few groups won. Right now, the market is broadening out, and we think in an underlying sense, the bull market is strengthening, and that will play to our benefit over the longer term.
How about Tesla specifically, which is now off 37% from the recent highs, is down another more than 5% today. Everyone wants to know what your new price target is, Cathie, because the last time you gave that price target, it seemed crazy to a lot of people, and then not so much when Tesla actually rocketed 700%. So where are you now on where that stock goes?
Well, we're about to publish, I'm hoping it's within a week or two, our new forecasts. Our confidence in Tesla has gone up for a number of reasons. One, it didn't lose share of the electric vehicle market when all of the traditional luxury brand names started bringing their own electric vehicles to market. Now, we expected we'll lose share, but our expectation was that its share would go from 17% at the end of 2018 down to 11% as more electric vehicles were coming out. Instead, what happened? Its share moved up to more than 20% and roughly 80% in the US market, 80% of electric vehicles. So that's the first source of confidence, market share up, not down. The second is autonomous. We believe that Elon Musk, who over the weekend tweeted out that he would offer, or Tesla would offer, full service driving to anyone who wanted it, saw an incredible burst in demand. So for him to be able to do that suggests to us that he's going to be able to show us the way to autonomous much faster than most analysts and investors expect. So the probability we have put on Tesla really winning the lion's share autonomous taxi network market in the United States also has gone up. So you might imagine the price targets have gone up considerably. We believe that Tesla has been doing this differently, staging the movement into autonomous differently from other companies like Waymo and Cruise Automation. And so I can understand why there's some confusion. We think that their strategy is not market by market ultimately, but national. And so I think there's a misunderstanding about how they're going to market.
You have been so right on this company and so many other companies that you know, I sit here and think, who am I to even bother asking this question? But I think it is fair to compare things today to Amazon, to people who were right to be bullish on Amazon as it pulled back in 1999 for a couple of years because of where it is now. But it did take almost a decade for it to get back above its pre-pullback 99 peak during a period of time when it continued to take market share, continued to grow revenues, continued to grow profit. But there was a 9-year period where the share price was underwater. Is that not possible to apply to Tesla going here, even if you're absolutely right that the company's top and bottom lines continue to grow, continue to take share?
Well, I know the Amazon story well because I was living, eating, and breathing it the entire time. So what we saw in the tech and telecom bust was the recognition that we were not ready for prime time for a lot of the companies evolving at that time. And so there were a wave of bankruptcies. And the psychology became, well, many people thought that the internet was a figment of Wall Street's imagination and that no one would make any money off of it, and Amazon included. And the time period you're talking about, Wilfred, was when Amazon basically was saying, look, we will be as close to cash flow neutral as possible, but we are going to turn every revenue dollar we possibly can back into investing. That's how they won. But they did not show profitability, not any substantial profitability, but often losses for many, many years. They just believed that if they invested aggressively at that time, that they would win the lion's share of the online retail market. And that was absolutely right. I think Tesla has already passed through that phase of its life. It did invest aggressively, and it has on four metrics. It is leading the charge, so to speak. So battery technology costs lower than anyone else's out there and will remain lower. Artificial intelligence chip, it designed its own. No one else has designed its own chip. This is analogous to Apple in the day. Cellular companies, Nokia, Ericsson, and Motorola didn't see the future. Apple did, and yet it couldn't get Qualcomm or Intel to move quickly enough. It had to design its own chip. And of course, now Apple basically accounts for the lion's share of all the profits from smartphones in the world. We think this is going to happen also with Tesla. Maybe not worldwide, because we know China wants its own champion. But that AI chip that Tesla designed, our analyst said, was 4 years ahead of where NVIDIA was at the time, and this was a couple of years ago. They have more data collected than any other company by orders of magnitude, not just by any other company, but by all other companies out there, because the largest pool of data with the highest quality is going to win in the AI game. They have the largest pool of data. And finally, until very recently, Tesla was the only automobile manufacturer able to improve performance of its cars with over-the-air software updates. I got my Model 3 in 2018, never had a problem except a nail in the wheel, which they couldn't correct over the air, of course.
Tesla's fault.
Never a problem. So what they've done is extraordinary, and I think this is their market to lose. I think they're in a very, very different place also. We're not in the tech and telecom bust. We are 20 years later. All of the seeds for what is happening now were planted back then. Now they're coming to fruition.